be a trade breakdown on a trade that I took on Tuesday, the 12th of August, 2025, which was a CPI day. It is currently the 16th of August on a Saturday, right? This is going to be a quick trade breakdown. All right. So I have been looking for price to reach the 0.25 standard deviation level, and we have reached it. We've reached the level, and it is no longer a target for me, and as I'm going to be looking for higher targets besides that, such as the 0.5 standard deviation level. All right. So this is ES right in front of you. I was looking for price to reach the 0.25 standard deviation level, in which we reached it on Tuesday during the AM session. Then we drop down to the weekly time frame. So on the weekly time frame, my drawn liquidity for the week was for price to reach the swing high and above that, and we had already reached it through the CPI news, as that was no longer a target for me, but I remained bullish regardless. And then on ES, my drawn liquidity was for the swing high right here. This was my drawn liquidity on Tuesday. Let me mark that out. There we go. Right. Let me drop down to the daily time frame. So on the daily time frame, on the morning on that day, I was looking for price to draw for the previous daily high, but we had already reached the previous daily high through the CPI news, and we already reached the swing high over here through the CPI news. So we're at all-time highs, but I remain bullish, because I do not want to be selling at all-time highs. There we go. On ES, I was looking for price to draw for this swing high right here, and we had as well already reached the previous daily high. So I was looking for price to draw here. This was my drawn liquidity on ES. So if I drop down to the 4H, because my approach is a top-down analysis, there we go. As we can see, and as I've said, we are in a market maker buy model, right? And the buy model was completed when we rated this buy side liquidity. We rated this buy side during CPI, right? But I remained bullish because we were still in this 4H busy, right? And I was looking for price to respect this order block right here in the AM session. Right, so here in ES, we had not rated this previous weekly high, right? Price was still in this. Let me mark it out. Price had not rated. Look at the respect of that. Look at the consequent respect of this 4H busy. These are things that I pay attention to and help me be confident in my narrative, right? So I was looking for price to respect this order block as well and continue higher and draw for the previous weekly high, and eventually the 0.25 standard deviation level. As you can see, we reached it, and we're now currently retracing lower. Let's drop down to the hourly time frame. There you go. So on the hourly time frame, as you can see, this is the damage CPI did. Rated buy side liquidity made us at all-time highs. Right, we're at all-time highs, but we created buy side liquidity. So this was my drawn liquidity for this session. Buy side liquidity, there we go. Yeah, so during the silver bullet hour, which is 10 a.m., I was paying attention to this busy right here. I didn't want to see price close below it as far as the bodies. Yes, it can wick through it. As we know, that's just price doing damage, but we want to see respect as far as the bodies. So that was what I was paying attention to. We can clearly see price rejecting of this rejection block, right? Which is what I want to see to support my narrative. If we go to ES, right, my attention was on this 1 HPC right here. This is what my attention was on. I wanted to see price respect this. There we go. 1H BC. And then my joint liquidity was for this buy side liquidity right here. So my joint liquidity here was for this buy side liquidity and the previous weekly high. So as you can see, like from top down, from the top to the bottom, price is clearly looking bullish, which is what these are the type of trades that I want to be part of. I want to be part of trades that are like this. So I had as well noted this order block. All right, my attention was on this order block, 15M order block. There we go. And I was paying attention to this 15M SIBI right here, which I wanted to become a 15M inversion fair value gap, right? So I was not looking at this as a reason to be selling the market. I wanted to see this become an inversion fair value gap. Okay, let me just mark that out. 15-minute inversion fair value gap. As you can see, we traded right through it, respecting this 15M BC right here, right? So this is what my attention was on the 15-minute, right? So if we look closely with ES right here, so this is CPI news release, right? Traded higher, rating buy side liquidity, right? So from 10 a.m., if you notice, from 10 a.m., we raid the low formed on CPI. So in the lower time frame, this is a low, right? As you can see, it's not a low here on the 15M, but on the lower time frame, such as the 1 minute, I was observing this as a SMT, right? Because we rated this, we traded below, rating it right there, but note how we failed to rate CPI's low here on ES. So that is a cracking correlation, hinting to, oh no, informing us that ES is a strength leader in this buy program, right? So we already know that ES is likely to be the strength leader to the buy side. This is the strength leader, but I trade NASDAQ, right? So this is what I was looking at. So if we look here, we didn't even trade to this order block, right? So I pay attention to such stuff. As you can see, this is our leader to the upside. Also looking at this as an inversion fair value gap, right? So that's the importance of narrative, right? This is not a place to be shorting. That's why narrative is literally crucial. So I was also looking for price to trade through the consequent encroachment level of this large wick right here, to see price to be able to trade through it. All right, so that's what I was looking at, and the same for the NASDAQ, looking for price to trade right through it. Right, so if we drop down to the 1 minute time frame, is this? Okay, let's scroll to the left. As ICT has said, I'm pretty sure these students who know a better way of scrolling back, but forgive me for that. All right, there we go. All right. So right there, here's our drawn liquidity. Right, as you can see, this is clearly the sell side of the curve and the buy side of the curve. Market maker buy model right there. So if I put this right there at this low, right, look at that low formed at 829, right, 829. So we failed to rate this low right here on ES. We failed to rate that low, so that is a cracking correlation, right? So a lot of our good traders in this industry bought this inversion fair value gap right here, had their stop loss at this low, right? That's, yeah, you would have got a large piece of this buy program right here if you would have entered in this inversion fair value gap, right? Look at the fact that this trade would have formed within the macro 950 to 1010 macro, right? This is the 950 to 1010 macro. There we go. We get that SMT formation, right, in a high time frame PD array level, which is the 15M BC right here, and the 15M order block right here, right? And you would have, if you would have entered right there, your stop loss would have been here, targeting the buy side liquidity. All right. So there we go. And you would have taken partials along the way. Yes. Okay. So with me, I was first considering to enter off this inversion fair value gap, right? I was looking to enter off this inversion fair value gap with my stop loss below this BC right here, right? So that's what I was looking for, but this is just 2 PD arrays, right? So ICT says that you need 3 PD arrays that you want to see be respected, right? So your third one could have been, right, saying that you don't want to see price trade below the consequent encroachment. You probably would have had your stop loss here to be protected, but I did not take this entry because I didn't have a proper place to anchor my stop loss. I couldn't see where I would anchor my stop loss. Yes, we have an entry, which is entering off this inversion fair value gap. Entering off this inversion fair value gap. Look at the respect right here. This is just like a mohawk, but we're overall respecting it. Overall respecting the inversion fair value gap. Let me just mark that out real quick. Be overall respecting it, right? Yes, I saw the entry that like I can enter over here, but I don't know, I don't have a place to anchor my stop loss, so I just left price and I wanted to see this placement further on, and I was going to look for an opportunity once price is traded above this high, because this is also a breaker, right? Well, these consecutive upgrade candles are a breaker, so I was hoping to enter once price trades above this market execution right there, enter right there, stop loss below this breaker. So this was going to be my, because this is, for me, this is a valid place to anchor my stop loss, right? So this is what I was looking to use as an entry. Could have taken this, but I didn't know where to anchor my stop loss, and I would have been stopped out if my stop loss was right here. But overall, we respected this BC. Look at this via the bodies. We respected it, respecting the inversion for value gap, right? But you would have probably been stopped out by this wick right here if you would have anchored your stop loss here, right? So stop loss and stop loss placement is very important, right? So price traded above. This is what made me confident. Price traded above, and I entered somewhere here, and I anchored my stop loss below this order block right here. Entered my stop loss right below this order block. So it looked like this. My trade looked like this. Right there. And this was my target. This is where I came out. So it's like a 2-hour trade. Yeah, that's exactly what I did. A 2-hour trade. Yeah, this is what I did. So yes, this is what I did. So a better entry would have been, it would have been the same thing actually. Entering, once price comes back, it gives you another entry. But I did not wait for this because sometimes price just runs without giving you an entry. So it is still valid entering here and anchoring my stop loss. Because even if price had to retrace back, it's still valid. So that's why I entered on a market execution instead of putting a buy limit, because it was still valid regardless, right? So that's where my entry was. My stop loss was here. Had to weather this time distortion. This is all time distortion and no tail price. No tail price. Manipulate, right? Runs out the sell side liquidity right there. Runs out the sell side liquidity. Respects this order block. I had trailed my stop loss to being here. So I was basically break even on the trade. I trailed my stop loss. Price ran out the sell side liquidity. Traded higher. Came back. Let me just do this. Came back to respect this order block right there. Boom, there we go. Respected the order block. You could enter off here. That's another entry. And this is a good entry, to be honest with you, because it's within the 1050 to 1110 macro. So this is a good trade if you know what you're looking for. If you are in sync with order flow, you know this is a good trade, right? But I didn't really enter. I was already satisfied. I could have entered more positions. Yes, I could have entered more right here because I was already break even, so I could have actually entered more. Yes, I could have entered more because my stop loss was trailed below the stop loss, below this order block. So you could enter more right here, and boom, look at that. Look at the delivery within this macro. Look at the delivery. Lovely, lovely, lovely stuff. So this was just time distortion, manipulated lower. We get a breaker because it's also breaker plus order block entry. Price respects this. So if you look low here, there is a BPR, balance price range. Price respects it. As far as the bodies, this place is higher, right? And yeah, you would have exited right there. So this was a lovely trade. I know a lot of people in the community caught the trade, right? A lot of people caught the trade. I took it on paper and I took it on my equity edge challenge. I'll update you guys as far as that at the end of the video. So there we go. There was my entry. Boom, right there. As you can see, my entry was there. My take profit was there. As I said, entry, take profit, 2-hour trade. Easy as that. Done for the day. Don't need anything more. Right. So yeah, you were saying, look at the delivery here. So with ES, as you can see, we reached the target way before NASDAQ. So I'm pretty sure it's frightened a lot of people because they would have saw this as an SMT. You know, a lot of people probably got frightened out of their positions right here after they saw ES raid the buy side liquidity. But I remained bullish because I understood the fact that we still have to draw for this previous weekly high, which is why I was comfortable to hold my position, because I knew ES has to trade high. It has to catch up to NASDAQ and raid the previous weekly high. So I was confident in remaining in my position. All right. So look at our price, just respects this order block right there. Boom. Order block. Trade stays within the order block. Look at that. I just want to see something real quick. How lovely is that? Look at our price respects it as far as the the bodies. Price does not trade below it as far as the bodies are. That's pretty lovely. Yeah, that's pretty nice. Okay, look at that. You could have entered off this change in the state of delivery, stop loss below, you hold the trade until the previous weekly high is rated, if that's what you trade. If you trade both assets, yeah, you could have traded this because it was a strength leader, and ICT always suggests to be the one to always take the one that's, yeah, that has the strength. So yeah, you could have taken this, you would have profited, and it could have been done for the week if you had traded this, right? So there we go. As you can see, that's my entry, stop loss right there, target right there, boom, down for the day. Lovely trade. So at the end of the video, I'll be showing you guys, just updating you guys on my equity edge challenge, my 5K challenge, right? So I risked 0.5%, which was $25, right? Yeah, $25. I risked 0.5%, and I took partials along the way. I think I took a partial once price traded in here, and another partial, yeah, and take profit was here, but I took partials along the way. So I only risked 0.5%, which is why the account is not up that much yet. Yes, so I risked 0.5%, and yeah, I'll update you. I'll show you guys where the account stands, where the account stood on Tuesday, right? So that's pretty much it. Enjoy your day, be safe. I'll be posting the account after this. So goodbye and enjoy your day, be safe.